like a pro, like a pro. Yeah, I'm trading like a pro, like a pro, like a pro. Making profit like a pro,
like a pro. Time to let them know. Bank on the phone, no, I don't need a loan, cause I'm trading like a pro.
we getting paid, we getting paid, we getting paid, huh? Stacking that money from the trades, huh?
Ay, we getting paid, we getting paid, we getting paid. Stacking that money, I'ma teach you how to trade like a pro.
With a trading plan, this is what people don't like to talk about, but it's the risk. It's the risk. We only think about that take profit, the profits, because team take profits, money all around us. You know what I mean?
Right.
But we got to think about what's the loss.
Right.
What is the loss I'm possibly going to take? Can you expound on that?
Sure. Yeah, as you know, I teach our team, the beginners. And so one of the biggest things that I always talk about is risk management. We all know that our strategy doesn't work 100% of the time. If you have a strategy that's working 70, 75% of the time, you have a great strategy. But the thing is, that still means you're going to lose 25 to 30%. You just don't know which ones those. And so if you happen to constantly put in the proper lot size, let's say 2% or 3% of your account max in any one position, or aggregate of positions. In other words, if you have 3 positions open and your max is 3%, each one of those positions should be 1%, and that adds to 3. You don't want to be really risking more than that. Once you are an expert, once you have mastered the market, perhaps you can risk more. You will know, you'll have a feel for when you should risk a little more. But in general, for traders who are brand new or intermediate, you should consistently not trade more than 2 to 3% at the max. If you're brand new, 1% or even less, because you're trying to create the consistency. You're trying to build the consistency. Once you have the consistency, then that's fine. And one of the things I've also noticed is the market tends to be choppy on Mondays and Fridays. And so on Mondays and Fridays, my lot sizes are smaller, because I just don't know. And I'm happy to take less profit on those days, just because I'm there to watch the market, continue to get the feel for the market, but I'm not going to risk on days that it's just not going to move. And then Tuesday, Wednesday, and Thursday, they move very well, or most of the time. This is the summer and it's been very choppy, but most of the time they move pretty well. So then I use my regular lot sizes. But yeah, if for example, if you're disciplined only 70% of the time, and those are the ones that you're winning, and then you're not disciplined on the 30% that you're going to lose, because you're going to lose, your strategy is going to lose, you're going to mess up your account. You're going to decimate your account. So lot size is very important, is hugely important. And the only way to, the best approach about it, I think, is to be consistently always trading the same. Oh, and this reminded me of something. When I was in the beginning, I was all over the place. I wanted to trade big lot sizes because I saw you doing the same. And you were having great success, and I was all over the place, and I was inconsistent. And so you told me, Robert, what's the lot size that you're really trading well? Or at that point, I was trading the $5 lot size pretty well consistently. And you told me, just stick with that for a year. And so that's what I did. The account kept growing, but I stayed with the $5, and that just gave me a level of comfort. Really, to the point that now, if I was to take a $5 lot, I have no worries. I have no worries. I know if the thing goes against me, it's not going to hurt my account. And then I could give it the room to come back my way. You know what I mean? So it's hugely important finding a lot size. Oh my gosh. I'm sorry, because I was thinking about this today. It's not even about account size, really. It's about what can your psychology handle. If you happen to have $100,000 account size because you have the money and you open the account, but you don't know how to trade, and you don't have the psychological build up yet on how to trade that 100K well, putting in a huge $100 lot size is not going to help you. It's going to mess up your account. You have to build your psychology or build your lot sizes along with your psychology. Even if your account keeps growing, you have to slowly build it up. That's what I'm still doing. My account can handle larger lot sizes than I am trading, but the level of comfort is not quite there to trade those larger lot sizes. So I'm not doing it because I feel uncomfortable. And the moment that you feel uncomfortable in a trade, you're going to mess up. You have to have a level of comfort where you're not agitated about whether it's going that high or that low. You know, you got to trade in comfort, calm, not panic. It's going against me 10, 15 pips. That's just what the market does, you know?
Yeah. So in Forex, it's kind of hard to time that perfect entry in Forex. Candles it's really a consolidating market, and it's always back and forth, back and forth. It'll still trend the direction that it's wanting to go in, but it's just not going to just drop altogether. Right. Not all the time. Most of the time, it's just stair stepping downward, you know, right. And back and forth, back and forth. So for that reason, it's hard to really pinpoint. Sometimes you will get lucky on a wick entry. A lot of times we do that with the way we trade, but you know, for the average trader, it's hard. So you have to use the risk management, because you have to leave room for that drawdown that's going to happen most of the time. So yeah.
And on that point, for example, if you don't put your full lot size right off the start, and it goes against you, and as you're seeing the price action move, you realize, actually, this was my entry. You can add another position because you're not maxed out on your position. You know what I mean? So and that's happened quite a bit. And you used to do it where you used to put a 10-cent lot size and then wait and then see how the market is moving. And then when you know the real direction, boom, you would drop your $5 lot size or your $10 lot size when you were trading, when you were before you became the master trader that you are today. And so that's something that you can manage your risk also that way, by just simply halving your lot size. And I'm not talking, it's like kind of hedging a little bit, but I'm not talking in terms of hedging. I'm talking about finding your entry, you know, just like you were saying. Once you know what the entry is, for example, if price keeps moving and you realize, no, it's not really, price action is telling me, no, this is against me, close it. You just close it. And because you were at half position, it's not a big deal, you know. But if you see price action moving, and now that you see price action moving, you realize this is the entry I should have had. Boom, you put your other lot size there, and you can either close the first one when it gets to that point, or you can let them both run and for your regular lot size going in your direction.
Yeah, absolutely, absolutely. When I was first starting out, the big talk was about break and retest. That was the big talk. And that's because that's what I was surrounded with. That's kind of like the approach that I took. But I'm curious, what was your approach? Did you start out as a breakout trader? Because I believe that that's important. I want you to talk about that in regards to trading plan. You know, can you enlighten us on that? You know, your approach, or what type of trader you are?
That has to be part of your trading plan for sure. Since we have a very consistent breakout strategy that wins with high frequency, we have focused on that. And so you're either going to take the breakout or you're going to take the retest. And this is what kind of you learn as you go on through the year. Okay, during these times of the year, the breakout is better. During this other time of the year, the retest is better. But in the beginning, to build your processes and your strategies and your rules, you got to stick with one. And you got to stick with one, and you have to do it over. And I'm talking about 50 times. You got 100 times. You know, you have to have enough volume of data to tell you, okay, this is working consistently for me or not. You know, we have traders on the team that will have a few days of losses on and they're already giving up on being a breakout or a retest when you don't have enough data to know. You know, if out of 100 trades you're going to lose 30 or 25, maybe perhaps you just ran into your run of 10 losses, and then you're going to win the next 30. You know, if you stick to the strategy. But if you're constantly flipping, then you're never going to learn neither one. You know, and so for me, I was trying to keep up with you. Again, you were taking those breakouts and you were winning consistently. You were winning so much, and I would take the breakout and I would mess it up because I was entering too early. You know, I was going in too early, and then it would stop me out, or I would close the deal, and then it would come back my way. And so in other words, my analysis was right, but my timing was off. You know, so the simplest way to cure that is to wait for the retest. The simplest way to cure that is to wait for the retest, because the retest is real clear. You know, it has to have broken out. Now it's out. Now you know it actually broke. It closed outside. Now we're looking for something very specific once it breaks out. And once you have those confirmations, then you're in. Then you're in, and you have a much higher probability of success because it has already actually broken out. You're not trying to catch the breakout. It broke out. And so, but once you know it, by the way, once you have done either one, once you have done with enough frequency, whichever one it is that you pick to choose, you know the other one. You know, if you master the breakout, you learn the retest. If you master the retest, you know the breakout, because you learn when it is, how it is that the candles move before it actually boom breaks out. You know, that took me a long time. That took me, because again, I kept bouncing back and forth. That's the reason why. Once I stuck with the retest, and I was a retest trader for a long time. Once I stuck with the retest, then the breakout became a lot easier.
Hey team, if you want to watch more of his content, more of that psychology, you need to get your mind right, then check out his YouTube channel at Rivera Trading Group. That is his YouTube channel, okay? He's on Instagram. We'll post all of that in the description below. And hey, if you want to watch the other episodes to this interview, then click that video right over there. It's going to lace you up. I know it's going to be exactly what you need, okay? When to trade, when not to trade, exit strategies, entry strategies, okay? Click the video right over there. Don't forget to like this video, comment, and subscribe. And let's make this money, baby. Peace.